every day at the chart a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the blank minds, margins and leverage like mountains to climb. Spent the whole week on Delta.
Make sure your mic is close to your face.
Yeah, my theory ain't cutting to their peaks. Volatility shakes, but they...
All right. What is today? Today is 11/10. Excuse me. Today is 11/10. It is Monday. And the market is up pretty big today. Nice big bounce out of the hole. NASDAQ up 400. S&P's up 66. We got the Russell up 22.8. And the Dow was red earlier, not that long ago, maybe like 30 minutes ago, but it's bouncing here too. We got all our gold up huge, silver up pretty big as well. Your softs are all up, and then basically everything's up. You got crypto up too. The crypto's not up too big, but then the VIX is down $1.18 in the futures. So market up, VIX down, gold, silver up, crypto up. Everything is fine. Cancel the crash. Going back to buy every dip. All right. So let's see what we got going on here. What do we got for positions that are profitable? You now have this Oracle position that open up Oracle. This is that put that I sold in here. Expires at the end of this week. You've got an Oracle long at 235, meaning you're going to get long it at 235. It's got $267 left in it. You made 26% of your total available to make within like 1 or 2 days. You can either close that and take off some buying power. So if we get into another situation where we get a down move, you have more capital, or you can leave it till the end of this week and just see what's what.
Let me take it off.
To you. No, you didn't go to your mid price. $130 out of that one. Okay. Now you got Tesla that's cooperating nicely today. I did make an adjustment in Tesla. You see how that February contract, remember through that binary event, I rolled it out to February to give yourself to take off a bunch of risk. Well, now that event's over, what I did is I moved it back up to close to where we had it before for a net credit of like maybe 20 cents. So got all that credit back, but you moved it a lot closer to the risk. So that's working today. I already adjusted that one this morning, so I don't think I'd do anything else in there. Now you've got your Russell now you're at your all-time highs in your P&L in the Russell. So again, I adjusted this one last night by rolling that 22 or 2375 up to the 2400, took in another little bit of a credit there, tried to get your delta flat. You're probably actually leaning short in here now. Scroll to the right a little bit. Yeah, you're leaning a little bit short in here. I still say you don't touch this one. That little bit of short delta is going to come in handy if we get a down move. Go back and look at MU now. That one, you've got a lot of short delta in here. This thing had a nice big move today. Scroll to left, to left, to left, to left. You got to do something in here. You got so much short delta now. This thing's had a massive rally today. It's up like, I don't know, feels like 20 points. So you're going to have to do something with that 165 put. You're short 22 delta in here. Plus you have 10 long shares. Go to details. It's the one in December. The one in December is your, yep. Yeah, I would take it all the way up to at least like the 200.
This crinkling piece of plastic. Alright, sorry, what did you say?
I would take it all the way up to probably like the 200 at like a minimum.
What is it? Oh, it's ask over here. 200. Right there.
Yeah. Yeah. Review that. Send that. And then now at this point, we've got what? You've got the 270, which is only 15 points away. You do have some shares that are now up $240. 15 more points, that'll be up another $140, $50. So that'll make your shares give you an extra basically buffer to the upside of about $400. Plus you've got now $5 in credit on that put, which will basically give you a $900. And then the $7 in credit from that call will put you at about $1,600 above this 270 strike. So $16 above that puts you at 286. So you're still about $30 away from like a break even point in there. What's your delta in there now? Cut it in half. Still leaning short. I think that's probably okay.
Okay.
Yeah. Go to NVDA. You're still down 600 in NVDA. Scroll to the left. So here's a way to look at this. When you started this account, you were just about right here as far as your net liquidity, right? So the amount of money that you've got, some of these positions that are down pretty substantially. So you've got the MP that's down 800, MU's down 400, NVIDIA's down 600, but your overall amount of money that you're working with, because we've been taking winners off this whole time, your overall money is pretty much right where you started. So in order to make money in this account, these don't have to come all the way back to winners. If one of these comes all the way back to a winner, then you're making money because we're taking off the winners as we go. And you still have some that have made money that are still on. So basically, when you get to this place, you're not in a bad place because you haven't lost any money. Actually, you've made money if you take into account that you've paid yourself a little bit along the way as well. So you're at least flat or maybe up a little bit. So when you get a move like this, it's not a terrible idea to look at ways to reduce some risk and widen out your positions. So in something like NVIDIA, where you've got this 210 call and we're getting some strength back in NVIDIA, I wouldn't be opposed to, for a debit, taking this 210 and maybe just adjusting your whole risk profile up a little bit. So like not only rolling your call up for a debit, but rolling your put up for a credit at the same time. So you're basically just shifting your risk a little bit higher.
Okay.
So like and move that up to like the 175. Okay, yeah. And then the call, I would buy that back and maybe go up to like the 215 or 215 or the 220. What does that give you? Does that give you a net credit or net debit? It's still giving you a net credit. So you're still taking in money to do that. And you're shifting your risk to the upside to kind of help deal with this 4% up move today. So I kind of like that. Might, oh, no, you got filled. Okay. We adjusted let's look at MP. This was one that we were down almost like 1400 in one point. Now it's back down only 900. So this is one that we can maybe look at readjusting our overall risk in here. We don't have to hit a home run with this one, but if we can.
Your mic cut out. Oh, that's back.
Oh, I was saying for MP, this is one that you were down.
It's your mic. Check the cord. Make sure it's
Yeah.
plugged in right.
Huh?
It was flickering on and off.
Oh.
There. That's good. All right.
So with this one, here's what I would do. I would take this December call and I would roll it to like maybe to the 80. You're going to have to pay to do that, but that's okay. The December call, roll to the 80. Buy it back and roll to the 80. Yep. Send that. And then go to your January put. That.
Okay.
The ask. Yep. And then go to December again. So we get these things back in the same expiration. Now we're going to have the 80. So I say you leave it at like the 70 or the 7. Yeah, do the 75 again. You have the 75, keep it to 75. $1.45, that's fine. Send that. But now you're back in the same expiration. Oh, did he just screw up all of our cameras?
What? No. We're on Ninja Hyper.
Oh, he can come in here now. Hang on a second. Let me tell him he can come back. Yeah, we fixed it now. So people, if they want to come in and join and watch live, anybody can come in and join as long as they're going to be quiet. Okay. I mean, not you don't have to be quiet. I'm just saying if anybody wants to come in and watch. All right. So you're going to have to tweak those prices because you didn't get filled in either of those. MP's kind of a wide product. So go to your orders tab down at the bottom and adjust those. Both of them are a debit you're paying. So instead of adjusting it down, you're going to have to tick it up a little bit.
Like 220.
There you go. Yeah. Still not filled. Let that sit for a bit. And then the other, no, let it sit for a bit and do the other one. Oh dear, mid price moved by 15 cents. Jeez. Okay.
Like 165.
That's plenty, yeah. All right, you're filled in that. Adjust that 220. I figured you would have got filled in that too. Go to,
More. 135. 220.
yeah, I guess that's fine. 225 is fine. You better get filled in that. That's bull crap. All right. Yeah, they kind of they took a few shekels from me right there, but that's all right. All right. Now, what do we got? We got Angel Studios doing crappy again on the day. Applied. Applied is actually a winner here. So, she's fine. Don't you dare shush your wife. Are you trying to get murdered? Um, this one we only have what 11 days, 10 days left in these contracts, and it's still marking at 246. So I don't think you do anything in here. It's finally starting to win. We've stuck with this.
Okay.
I think you just kind of leave it. And then an Archer moving in the right direction today. Still's got a ways to go. This is super weak, even with the move that we're getting today. Still super weak. I think you just leave that. AG, this one having a nice strong up move today with silver for AG. Open that up and take a look at that. Remember, this is one where we bought another 100 shares and then we sold calls. And now it's doing exactly what we wanted. So we're already above our price here. We're in the money now with these calls. So the intrinsic value um, is going to be shrinking as this thing continues to rally. So this is going in the right direction. Basically, all we need to do now is sit in here and have this thing be above $11 on expiration or close to it, and that'll be a profitable position. So I think that's pretty much all of it. We closed Oracle. NVDA, we shifted our risk up a little bit. Palladium,
MU.
Palladium, MU, we shifted our risk up or we rolled up in MU. And you don't have a lot of time in that 117 or 270 contract, and MU is in November too, so there's only 2 weeks left in that one as well. Palladium here, now that we're getting a little bit of strength in metals, the only thing you could do in here would be roll out and up to November. But honestly, I think you just kind of leave this be. How much extrinsic value is in that contract? It's basically what, $4 or so, almost $5 in that contract. So there's still about another $400 or $500 that you can make out of this. And I say we just let this thing go. I don't think you want to take it all the way out to January here. But other than that, I mean, everything is just working now. Yeah. You freed up a bunch of capital by taking off that Oracle. So, I mean, I guess theoretically you could put something else on here if you really wanted to. I don't know what's really interesting here.
I think we leave it this time and put on. If it's still good next time, put one on.
Okay, we can leave it be. All right, well, that's going to be the end of it then for today. I mean, let's go back over Delta and Theta. We haven't done that in a little bit.
Yeah, we've been doing that a long time.
What is your Delta again?
Had like 3 different things it was used for. I remember probability is one of them.
Yep.
Directional risk.
Yep.
I don't remember the third one.
You should sell some calls in BE. Sorry.
BE.
Yep.
So normally when Josh tells me to do something, I try to do the opposite. I'm just kidding. BE. What? I don't think I've ever traded this. I'm going to sell calls in here because of this little triple top or what?
What? Look at that monthly. It's way over. It's
Holy
it's way-
mackerel.
Yeah, I think it has a P. Let's check the P to E ratio again, real quick.
1700 PE ratio. Yeah.
Yeah.
Go to BE. This one will probably pay you to take risk on the upside. Let's look at November, just the 11-day in here and see what you can get paid. This is what, 137. Holy crap. Hang on a second. Something wrong. I don't know if I can say that. Let's look at the earnings and see when earnings is in here. Because usually when things are this juicy, that means there's a binary event coming up pretty soon, usually. BE. The earnings date for BE. I don't even show it on my platform.
They just had earnings. Earnings behind them.
Oh, okay. Well, scroll up then. No, down. Scroll up in price. I think you can sell that 190 or that 180 or even the 170 in the 11-day.
For a call or a put?
The call. Okay, you want to do the 180? Let's see how much capital this product is going to require. Hit next. Go ahead and put it to the mid price. No. Go to mid price. Do an even one or 260. Go ahead, review and send. It's only $1,300. Yeah, sure. Put that on there. Did not get filled. You're gonna have to tick down. I see the last traded price was 150 or 255. So maybe do 250. Yeah, try 254.
All right.
There you go. Now you got some more short delta on, so good. Okay. I don't think you do anything else. Look at that. You just keep making more and more money today. More and more money. The next thing I would probably do, not today, but Wednesday, if we continue to get, if your P&L keeps going up, we'll start to roll out and adjust some of this risk in your RTY because you're at your highest profit point in there that you've been at so far, and you still have a ton of risk in here. Go to open the Russell up and look at your net liquidity in here. I don't think you have net liquidity on here. Scroll to the right. Do you have net lick on here? Add net lick. NET. There we go. Add that. Close. Scroll. Okay. You have currently those contracts have a combined value of $5,000. So that's a lot of premium, like a lot of premium. So what we'll do is if your P&L continues to go up, we'll look at exiting that $5,000 in premium and then probably moving it out to somewhere closer to like $2,000 in premium. Especially since you're winning. You want to make those type of adjustments where you're taking risk off when you're making money. And then when you're losing money, you want to reduce capital required to maintain positions and take in more premium.
Yeah.
All right. That's it. That's a wrap. Go get your haircut. You look like a homeless bum. Oh, I was going to include here. Did you see? I wanted to go to the go to the public chat
What?
on your iPad. Go to public chat. Look at what we put in the.
Oh. Wow. That's great. It was really heavy, to be fair. That caught me off guard. It's extremely heavy.
It's only like 200 pounds.
It don't feel like it,
No,
though.
probably like 250.
When it's falling over, it feels like a lot more.
I'm sure. So that was his first attempt at trying to ride a dirt bike. Didn't go well. He eventually got it. All right. Don't forget to like and subscribe and check out Discord. And we will see you on Wednesday. Peace. Have a good one.
Another day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds. Margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this marketplace, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity tried, choking on the sand. Profits and losses, they'd rather go play bands. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. Candles rise and fall. Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind.